So it took you a little over 2 years to capitalize your M1 account with $107,000. All right, so that's a great job by you. And also utilizing our strategy, we getting anywhere between a 30 and 40% return. A 30-year loan of $200,000 on a rental property. That's why I say we're not buying rentals anymore. The only way we buying rentals is through this.
The bank.
It's like a person that have a house with equity and they not tapping into the equity. Like, why even own a house? This is Terrence's decision to use IBC, and IBC stands for Infinite Banking Concept without life insurance. So this is not even dealing with your IUL policy you setting up. This is what we cover in M1 in the M1 brokerage account. All right. So this is a real life scenario. So you own an Infinity Q50. Q60?
Mm-hmm.
All right, Q60. You own an Infinity Q60. You have a $42,000 car note, and your monthly payment is roughly around $700 per month, right?
Yeah.
All right, cool. So here's what we're gonna cover. We're gonna cover velocity of money. We're gonna go into your M1 account. We're gonna go over M1 borrow and your M1 balance. And then we're gonna cover the Infinite Banking Arbitrage Calculator. It's a calculator that Anitra and I created so we could see the arbitrage amount between the interest debt and the amortized debt. And I'm gonna show you how that look. We're gonna cover a 12-month outlook.
Okay, what does the term arbitrage mean?
Arbitrage is just a spread between the borrowed money and the money you lend. So it could be, you could arbitrage anything. So if somebody buys something at a wholesale price and sell it at a higher price, the spread between the wholesale and what they selling it at is the arbitrage.
Gotcha. So if I buy a sofa at $300, when I sell it at $600, I got $300 arbitrage.
Exactly.
Gotcha.
So just think of it as a spread. And that's how business operate, is they make spreads. So what is the velocity of money? Velocity of money measures the number of times that one unit of currency is used to purchase goods and services within a given time period. In other words, it's how many times money is changing hands. In other words, we like to simplify everything. It's just the movement of money.
Yeah.
That's the velocity of money. All right, we're gonna cover an example. All right, so here's a VOM example. You have Lender 1, Russell, and you may recognize some of these names. So we have Lender 1, Russell, started with $100,000. And all of this is an amortized loan of an interest rate of 12% for 1 year. And then you have Teresa, Lender 2, started with $100,000, interest rate 12%, and the term is 1 year. It's an amortized loan. All right. So year one, the numbers represents the months, and the $9,333.33 represents the payment. As you can see, after 1 year, both lenders have $112,000, which is a 12% yield, right?
Yes.
All right, but one lender, the smart one, decided to utilize the velocity of money. So Teresa decided to take her second payment and re-lend that money out to collect another 12% amortized loan for 1 year of $93.93. So she collected additional $93.93 for additional 11 months and earned $1,033.23, while Russell just did that one loan of $100,000. All right, that makes sense?
Yeah.
She did it again for her third payment. This third $9,333 that came in, she loaned that third payment out and collected $933.30. So here are the results. Just utilizing the velocity of money, Russell had a 12% yield and Teresa had a 14.8% yield, just utilizing the velocity of money alone. All right, and this is I'm gonna bring all of this together later on, because with doing infinite banking, it's all about utilizing the velocity of money, and I'm gonna show you why. So, and people just utilizing velocity of money, they have people that made 6 and 7 figures just off of utilizing the velocity of money. Keep recycling that money, the movement of money. All right, now let's go into, we're gonna get off this presentation, we're gonna go into your M1 balance and M1 borrow. Cool, so you see your M1 account, right?
Yep.
So it took you a little over 2 years to capitalize your M1 account with $107,000. All right, so that's a great job by you. And also utilizing our strategy, we getting anywhere between a 30 and 40% return, right? So this is where you at, $107,000. Let's go over M1 borrow. So M1 allow you to borrow 50% of this 107. So if you was to borrow a margin loan, You could borrow at 6.4%. So keep that in mind, 6.4%. But if you take out 25% or more, they offering this bonus. If you take out 25% or more, 25,000 or more, your M1, they'll give you an interest rate of 5.4%. So keep 5.4% in mind. So if you borrow on margin, right?
Right.
As you can see right here, you see right here, you could borrow $53,000 of that 107. That money just sitting right there, available to you to go make additional money or utilize infinite banking. All right. So you have 107 in your account, and you could borrow 53,000 at 5.4%. All right. Now we're going to go into the infinite banking arbitrage calculator. All right. Let me explain this calculator. So right now the scenario is you got $42,000 in a car note, right? Paying $700. So a car note loan is typically anywhere between 60 months to 72 months. So let's do, for the sake of this example, let's do 72 months. That's 6 years, right? And you could borrow with M1 borrow at 5.4%. So 5.4%, as you can see, 5.4% up here. And now we have to lend out to yourself with infinite banking to get the same payment. So that same $700 payment, we want to redirect that same $700 payment to your own banking system. So what interest rate you have to give yourself? So let's put 8%. Let's see what happens. So 8%, your payment right here is $736.40. So let's do a 7%. 7%. All right, so $716. I'm gonna just do 6.8% and see what happens. So $712. All right, we close. Let's just keep it right there. And then I have to press this green button right here. Okay. So what this saying is your arbitrage over 6 years is $2,345.57. And the time you would pay it off is 5.8 years. So consider this as refinancing. You refinancing your current car note right now. And let me break this calculator down a little bit. So everything that's in blue, all of the blue columns is an amortized loan, right? And everything is in this gold color here in columns is a interest only loan. So let me show you what's happening. On a car note is an amortized loan. A mortgage is an amortized loan, right? When you borrow from M1 Borrow, or if you borrow from your IUL policy, that is an interest only loan. So essentially you borrowing from interest only, but you lending on amortized. That makes sense?
Yeah.
All right. So if you give yourself a $42,000 loan, refinance your car on a 6-year term at 6.8% interest, $42,000, your payment is $712 per month. That's the same exact payment you paying to the finance company right now, right? Technically, $12 off, right?
$12 off, $13 off.
$13 off. All right. So the principal that you're paying is $474, and the interest that you're paying is $238. And your ending balance is $41,525, and that's the amortized loan. So the total interest is $238. Now, let's say if you borrow from M1 Borrow at $42,000, and that same exact payment of $712.03 every single month, you pay that to your bank now. So what's happening is that you're paying $189 in interest, and $523 is the excess payment that's paying down principal. So now you got access to that money again. That money is no longer disappearing. Right now, the $700 you're paying is disappearing, right?
Yes.
But now you paying down $523 every month. And actually every single month that excess payment is going to go up because this is an interest only loan.
Yeah, and it's going into my account, right?
It's going to paying down the M1 Borrow debt.
Okay.
Now this is where the velocity of money come in. Because since you have access to this money again, what do you do with it? If you have more debt, you borrow against it, pay off the other debt. Now let me show you what's happening. Let's go back into the presentation, but you get this infinite banking calculator, right?
Yeah.
So let me show you what's happening. So we went over your M1 balance, we went over M1 borrow, and we covered the infinite banking arbitrage calculator. So let's recap. So your money is no longer disappearing. The $700 is no longer disappearing. You could utilize the velocity of money to increase your yield, and you are capitalizing your bank by recapturing interest. If you see the arbitrage, you're capitalizing your bank with additional $2,300 because you collected that arbitrage, right?
Right.
But that's not a lot of money. We know that's not a lot of money. That's not much to recapture. But the true value in this, with the car example, is the VOM, the velocity of money. So here's your 12-month outlook. So if you look at this side, this is the $42,000 in debt that you have, right?
Okay. Okay. Yep.
So in year one, it's $42,000. The start of year one is $42,000. And in year two, it will go down to $35,713 because you pay that $700 payment, you directed that to M1 borrow. So it went down to $35,713. In year three, it went down to $29,000 because that same $700 payment is paying down the principal. And in year four is at $22,077.31. All right, now what's happening on the income machine side in your net worth, right? What's happening, where your M1 account is at now?
107.
So year one, you had 107. Right now, you're at 107. In year two, you at 205, because right now we're experiencing anywhere between a 30 to 40% ROI with the income machine strategy. Right. So I just put in these numbers based on like a 30%, I think 30 or 35% ROI. And in year three, you at 325,000. In year four, you at 490,000. So as you paying down this debt, your M1 balance is steadily increasing. Right.
Am I still at 107 if I borrow 42,000? I mean, if I borrow the money?
Well, yeah, because the 107 is still working.
Okay.
The 107 is still working because your money, the 107 is still in M1 inside the index funds, but you're just borrowing against the policy. But now if you're looking at your net worth, of course, it's 42,000 minus 107 if you're looking at assets and liabilities. But I didn't put net worth as far as that minus in the liability of 42,000. I just put the balance. This should say balance, your M1 balance.
Oh.
Yeah, so that was a good question. So let's look at this. So your net worth in M1 is 107. You borrowed 42,000 in year one, but now your borrowing capacity in year one, the day one when you do this, your borrowing capacity will be $11,500. All right. So in year two, 205, and your balance, you paid it down to $35,713.02. And now your borrowing capacity is $66,786.98. Look, if you have student loan debt, you could utilize velocity of money. Let's just say if you have $50,000 in student loan debt, in year two, you could borrow from M1 again and pay that off and direct the student loan payment to your banking system. Right?
Right.
So in year three, your borrowing capacity is $133,000.
Okay, you gotta take me back just a little bit. I want to ask you something about borrowing capacity.
Okay.
How do we come up with that number?
That number is based off of what's in M1. So if you borrow, let's go back to year one. Right now, you have $107,000 with a borrowing capacity of $53,000. So if you utilize infinite banking to pay off your car right now.
Oh, and then I'll have 11 left from the 50.
11,500 left. Yeah.
Okay.
Yep. And then in year two, since your income machine is growing at 30 and 40%, you're gonna have $205,000 in the next 12 months.
Yeah.
And your borrowing, and then you pay down your debt on your car to $35,000. Now you have a borrowing capacity of $66,000. And here's where you utilize velocity of money. You become a lender now. If you don't have any debt, great. You don't have to utilize infinite banking. But you could also lend money through private money lending. You could decide, like on year three and year four, you could buy a rental property. Let's say if you find a $200,000 property, because in year 4 your borrowing capacity is $222,000, you could be your own bank on your rental property.
Right.
But you have to lend the money at this stage.
Gotta lend it. Yeah.
Because you want to utilize velocity of money.
Yeah. So the money gotta be moving.
It got to be moving.
Yeah.
But in year 3 and year 4, that's when your money is going to be accelerating, because not only your income machine growing by 30 and 35% year over year, but now your borrowing capacity is in the 6 figures, and now you can go create even more income, even bigger arbitrage. For example, if you lend $100,000 at 10% through vertical capital, that's and you borrowing at 5.4%, that's a 4.6% arbitrage on $100,000. That's an extra, probably like an extra $400 or $500 per month. That arbitrage could go to even to building this M1 balance even more. And that's just utilizing the velocity of money. Or for the rental property example, what if you could give yourself a 30-year loan of $200,000 on a rental property? That's why I say we're not buying rentals anymore. The only way we buying rentals is through this.
We the bank.
Is we the bank? Yeah, exactly. Because that's where you make the most money. You make the most money in the finance, and not borrowing to buy the rental property.
Right.
But in 4 years, you're going to be in a position where you could be your own bank on a rental property. But that's it, though. That's the end of everything. I wanted to just put these visuals in place just so you could understand the importance of velocity of money. And that's what this infinite banking strategy is allowing you to recapture. It's doing the multiple things. You recapturing interest. You can utilize the velocity of money, and your overall net worth is growing faster because you're doing those two things.
So I'm at year number. I've already paid my car note for 1 month, so I don't have necessarily 6 years of it, right?
Well, you're refinancing yourself.
Okay, so I'm refinancing. So do I go back to 6?
Yeah, you'll go back to 6. So you're just refinancing it at $42,000. Yeah.
Okay.
It's kind of like if you take out
what I owe, or do I refinance it on what I bought it for?
You could refinance it on what you owe.
Okay.
Yeah, refinance it on what you owe, because if you refinance it on what you bought it for, you kind of like, you're doing like a cash out refinance, because you taking cash and you don't need to do that. You don't need the money. Yeah, so you're refinancing on what you owe, and it's also helping with your credit as well. Yeah, because this loan is not going to report, the loan you're doing with M1 is not going to report to the credit bureaus.
So they don't have to go check my credit or nothing like that.
No, this money, we consider this money liquid because you could get access to it in the next 24 to 48 hours. Yeah, so because you're borrowing it from yourself. But yeah, that's it though. It's like you have this money sitting here and you could utilize the velocity of money. And it's right now, this money is just sitting here. You have access to $50,000 where you can go make more money with.
So right now, it's turned into a little bit, you're trying to get it to be less of a savings account and more of an investment account.
Well, it was never a savings account because you're investing in the index funds we're picking, right? But it's a way to grow your money. Okay. It's just a way to grow your money. And it's a faster way to grow your money. Adding infinite banking is just help you grow your money even faster.
Yeah.
And also you becoming your own bank. I talk about this all the time, where all of these major corporations, they make most of their money in the finance department. And like everything we talking about and what we talking about in our community is becoming your own bank. Because the average American with a college degree paid $500,000 in interest alone. Wow. So if you could recapture some of that $500,000 in interest, that's 6 figures.
Right.
But it's all about right now, you capitalizing your banks, you capitalizing your vaults, right? You capitalizing the M1 brokerage account, you capitalizing your IUL. But if you just, it's like a person that have a house with equity and they not tapping into the equity. Like, why even own the house?
Right.
Yeah, so it's like, you know, you got all of this money sitting inside of these votes and you're not tapping into it.
Right.
You know, yeah, you're growing, and yeah, this is going to set up your financial future, and you're going to become, be able to live off of this money. Yes, that's going to happen. But how can we move that date, that freedom date, whatever that freedom date is? How can we move that date closer?
Right. No doubt.
By utilizing infinite banking and becoming your own bank. Because when you get to year 4, there's no reason why we shouldn't borrow some of this $200,000. There's no reason. Like you got $490,000 inside of here in year 4 of borrowing capacity. You got $490,000 in year 4 with damn near $250,000 in borrowing capacity. There's no reason why you shouldn't use this to go buy a property or lend it out. Because if you let me go back to the arbitrage calculator. Let's keep that same example. $200,000 in year 4, and this is 4 years from now, and we know how fast 4 years passed.
Yes.
So if you loan to yourself $200,000, matter of fact, let's say if you don't loan to yourself, let's say if you got a mortgage for $200,000. Most mortgages is 30 years, and let's say you paying a 6.8%. We could keep it at 6.8%. Right now, and this is the amortized side, the payment on that is $1,303.85. And we're gonna go all the way at the end of 30 years. So the total interest you paid is $269,000. That's the total interest you paid if you just go get a mortgage to go buy a rental. You paid $269,000 in interest alone. That's not even including principal. So what if you became the bank on that $200,000? Now all I have to do is press this green button right here. Bam. It's gonna calculate. All right. The total arbitrage over 30 years, you recaptured $129,000 just by borrowing it from the M1 and buying a rental property. In the years to pay it off, and you paid it off in 21 years versus 30 years. Think about that.
So you're really getting, I mean, you're getting more money back and you're paying less out.
Yeah.
You got 9.2 years.
Yeah. So, and you could utilize velocity of money, because now that $1,300 payment, you paying $403, the excess payment, you paying that down in principal. 403, 405, 407. So now, as that money become available, the borrowing capacity become available again, you could re-lend that money out. Now you stacking the yield. Now that 129,000 is more than that because you stacking it with more loans, just like the Teresa example.
Yeah. I see what you mean.
So yeah, like that's why I'm not buying any more rentals. Our focus is to capitalize our votes, lend it out through vertical capital, and as our votes get bigger and bigger and bigger, we're gonna, on our current portfolio, on our current rental portfolio, we're gonna take back all of the debt on our current rental portfolio. And then we're gonna add more rentals, because a rental property, man, I have a mentor, he said he made $1,000 per year per unit. That's $83.83 per month, per rental unit. Because he borrowed money from lenders, mortgage companies and everything to buy all of his rentals.
So that's $83.
And 83 cents per unit. And he owned about I don't know where he at right now. He over 400 units.
Per unit per month.
Per month. There's no money in the rental game because you don't own the financing.
Right.
Yeah, your appreciation, you save on taxes, all of those things, that's the extra benefit. But rental property is for wealth preservation. After you went build your wealth, then you come back and store your money in rental properties. You know, but it's not for building wealth. But if you could become your own bank, you can actually build wealth with it, because now you recapture, this just on the financing side, $129,000. And the payment, let's say the payment is $1,300, right?
Right.
You paying back to yourself, but you probably collecting, let's say, $2,000 in rent. So the rent is paying for the financing, which you recapturing $129,000, and you have additional $700. Where you could also, what if you apply the $700 as paying down more principal? Let's say every single year you apply $700 to pay down more principal. Well, you got to put it on this side, $700. So let's just say on this side we add $700 and we do $1,100. Let's say $1,100 right here. That's additional $700. And let's just say we do another additional $700. Now you're paying it off faster.
Right.
You know, it's hitting more principal now.
Right. So instead of 21.8 years, it might be.
Yeah, it may go down a little bit. I don't know why. It should have automatically calculate, but yeah, it's going to go down a little bit, the time to pay it off. You know, and also if they have a maintenance request or anything like that, let's just say you have tenant turnover, you could just, and that's why recapturing the interest is so important. Right now, when landlords have to turn over a unit, they dreading that, because they have to come up with the money to figure out how to renovate it for their next tenant, right? Right here, you don't have to worry about coming up with the money, because you recapturing your interest. You can just borrow from M1 Borrow. So in 4 years, you're going to be in that position to do this. Or you could just lend money. If you don't want to deal with a rental property, you could just lend money through VC. And I recommend that, because that's interest only on interest only. That's not interest only on arbitrage, right? So if you have $200,000, we pay our capital partners 10%, right? $200,000, and it's simple math. I'm just pulling up my calculator. That's $20,000. That's $1,666 a month that we would pay you, right? And you borrowing that 5.4% on $200,000 times 0.054 divided by 12. That's $900, right? So you make an additional $700 every single month. And then when we pay you off, you pay your balance on M1 Borrow off.